we're going to end this class with an introduction to futures and leverage trading. But there's a point I want us to note. Now, in the cryptocurrency market is highly correlated. What does correlation mean? Every coin moves with Bitcoin. If Bitcoin goes down 5% today, every other coin goes down close to 20, 10, 15%. What does that mean? When a beginner comes into the crypto space, what they usually do is that they decide that they want to buy many coins. They want to buy Bitcoin, Ethereum, Solana, Arbitrum. Now, the correlation in the crypto market renders broad diversification useless. What does that mean? If I say I have $1,000 and I want to invest long-term in crypto, I carry $300, I buy Bitcoin, I carry $200, I buy Ethereum, I carry $100, I buy Solana, I carry, and you just go down the ladder like that, and you think you will make money. You are not going to make any money. Why won't you make any money? Because the crypto market moves together. No coin really moves separately from Bitcoin, aside from special circumstances. So generally, the crypto market is highly correlated. Everything moves with Bitcoin. So when you come into the crypto space, don't say you want to diversify. You want to diversify, have a spread among many coins. Correlation in the crypto space renders broad diversification useless. So now with that, we're going to finish today's class with an introduction to futures and leverage trading, which is the major thing that we'll be doing tomorrow. We're going to be trading live tomorrow, and finally, we're going to go into live trading. Now, what does futures and leverage trading mean? I have two major strategies for leverage trading. The first one is called a loan strategy. The second strategy is called buying leverage contracts, called perpetual contracts. In the loan strategy, there is no timeline to pay back. That's the beautiful thing. That's why we use it as an investment tool. A perpetual leverage contract basically means that I'm just going to a futures trading session so that we can see what that means. These are my live trades currently. What does perpetual trading contract mean? It simply means that you buy a contract. With leverage trading, you can use $100 as though it is $1,000, as though it is $500, as though it is $300, as though it is $200. That's basically the concept of leverage trading. You can use more money than you have. But what risks does that come with? It comes with a risk of liquidation. If we look at the trades I have on the screen, you can see something called, in yellow, called estimated liquidation price. What does this mean? If Solana is currently, my entry price in this trade is currently 149. The mark price, this is a perpetual contract, just to be clear. The mark price is $144. What is mark price? Mark price is the contract trying to keep up with the actual price of Solana. Let's not get confused. Let's understand this. Entry price is the price I bought the contract. Mark price is the price that the contract is currently in now. That's the current price of the market right now in that particular coin. Isolated, I'll just leave isolated first. I'm currently using 1.5x of my money long. What does that mean? Long means that I'm aiming for the market to go up. And my money is working as, let me see how much I put here. I currently invested $109 into this contract, and that is working as though it is $164. So you can see I invested $109. It's working as though it is $164. Let's go to the Bitcoin long and click this. I invested $107. It's working as though it's $323. So we can, and you can see I have liquidation prices. If it drops to $50, $50.740, I'm going to lose all my money. That's what that means. But that will never happen because I know how to manage my risk. I explained to us the concept of risk management, and the application will be taught tomorrow. BTC USDT long. Let's go to the Bitcoin section of the perpetual contract. If Bitcoin should crash to 72K, what this means is that I'm going to lose all my money. Will I let that happen? No. Why? Because I know how to manage my risk. I know how to drop these liquidation prices. I know how to take these liquidation prices further down. I know how to manage all my risks. So with that, we get the concept of leverage trading. Leverage trading simply means you are going to be able to use your money more than the value of your money. You can use $100 as though it's $500. You can use $100 as though it's $1,000. You can use $100 as though it is $1,000. You can use $100 as though it's $2,000. The higher leverage you take on, the higher the liquidation price. And what is a liquidation price? If the market should drop to that level or go to that level, you simply lose all your money. So with that, I've come to the end of today's session, and